after we analyze the company and we distinguish that this company is satisfactory for us, we like this company from fundamental point of view, only then we move to technical analysis. Don't skip the first step, because sometimes people jump on technicals and they think, oh, it's great, fantastic, look at this, it's support, I'm going to buy it. And they forget to look at their fundamentals. And fundamentally, maybe company is really overvalued and has a high potential to go down. And remember that like technical analysis in indicators like a car, okay? If the car in front of you is showing you like with the indicators that is going to stop, it doesn't mean that they're going to stop. Maybe their brakes are broken, okay, and they continue to grow like further. So pay attention. If they show you that they're going to turn right, it doesn't mean it's probable that they're going to turn right, but it does mean 100% that they're going to turn right. So same thing, technical analysis. And that's what we can see from 2009. We can see this huge move up to $20, then move down to nearly $9. Okay, it took from 2001 to 3 years up, and then 3 years down, and then 4 years up, and now it's on the way down for the last year. Okay, so can it go down lower? Yes, it can, right? But we know that at the moment, earnings are higher than last year and higher than 14th year, but the price is lower. So for you, it's much better opportunity to buy this company than if you were buying it last year. Okay, but pay attention that it's really volatile price based on emotions in the market rather than fundamentals quite often. But eventually, it's going to kind of adjust to the fundamentals. So that's what we can see. At the moment, it's weekly chart. So it's 7 day, one candle. It's 7 days. So, and that's what we can see. That it's reached a level of $20 in the beginning of 2016, and then it's slowly moving down. And I told you that their industry rank was adjusted here, okay, to 56, and probably that was a trigger for move down. Also, look at the indicators. When we look at these indicators, we can see that. By the way, the question I'll ask you, what shows these indicators, to buy or sell or hold? Write down before I tell it myself. Okay, Dean wrote it. Correct. Correctly. Yeah, 2 indicators definitely buy. MACD, it's actually start moving up as well. So both of them, like all these 3 indicators, they're showing up. And if we look at historically, when we had similar situation in 2009, and after that the share price moved from $5 to 20, so it's 400% growth. Also, we had similar situation probably here, right? After that, the share price moved from $12 to 15, and then we had it here, right? And that's it. After that, we didn't have similar, like maybe that level as well. Okay, so in this particular case, so it's pretty unique. This type of situation happens when all 3 indicators in this position, quite seldom. For the last 7 years, it was 1, 2, 3, 4, 5 times. Okay, so it gives us a very good signal for that particular time. Okay, if we go to the shorter period, so that's daily. So now we see 1 candle represent daily. Now I ask you, based on that, is it a buy signal or sell signal right now? Correct. That's a sell signal now. So because we can see that the downtrend, and at the moment it's right at support line. And also we can see that moving average, 50-day moving average, and we can see it several times. It's touched this 50-day moving average, and it was a kind of resistance level. So we can expect that it's going to pull back down. Very, very possible, right? And we can see that all indicators, they quite, not all, like MACD is neutral, but stochastic and RSI, they're already in overbought situation. Okay, it doesn't show the turn back yet, but still we can see it's pretty high. So every time when it reaches this point, right, so it's kind of triggers like buy signal. So what we can tell by looking at this, company is in a good shape fundamentally. From the long-term perspective, when we look at weekly, it has a high potential to growth. It's a good buy. But when we look at daily chart, it's actually not the best time to buy. So, and where do you think, like based on that technical, where's the would be a support level? Where will you look at the buying shares or doing something with it? What price level? Yeah, so 1350 correctly. So if it continues this trend, downtrend, this next support line would be previous low, so $14. If it breaks through, it can go to 1350 because that's, you see this, you can see a piece of, that's a long trend which I was showing you here. This one, it could be a quite strong support. Okay, and it's about $13.50. And if it breaks through that, it can go to $13 level. Absolutely correct. Okay, so that's why when you kind of create your own strategy, what you're planning to do, how you're planning to invest, you have to take into account. But remember that because the weekly chart shows us that it's it start moving, so it can actually break it, because weekly chart, weekly trend has more power than daily trend. Okay, yes, on a daily trend it can move down, and when we see it, both of them, weekly and daily at the low point, then we can enter. Okay, that would be the best time to enter position. Now we can see that it has one roll, two roll, three rolls, like quick rolls, and then very slow long roll. And now it's kind of only fifth roll. And usually company change direction after three rolls. We can say that it's kind of changed it. And after that, it has, if it's continue, the fourth roll, usually it has 5 rolls or 7 or 9. Okay, at the moment we can see that it might be the last roll right now, fifth. So if it breaks through this level, so it means that it's created a new trend. Then we need to know the new low, and then we can distinguish the price where we enter position. But if it stays in the same trend and it goes down, so we can look at the price, support price, $14 or below. Okay, so based on that, I looked at this type of strategy. Again, remember that you have to develop your own strategy. It's just possible strategies which could be implemented. All of you wrote the prices lower, so it means that you have to adjust the prices which are wrote here to yourself. So if you decided to buy and hold for long term, based on value line and based on what we analyzed through TCM guide, if we buy at $13.50 or $14 or $13, right, and then to sell it at $30 level price, we can create about 110% or maybe 160% of profit plus dividends. Okay, but we would have to wait 3 to 4 years for that. And during that time, the price might go up and might go down. But if you buy it for long period time, you can do it like that. Okay, so it depends on what kind of investors are you. Now, if you're more active, not that strong active, but still active, you can get it once a year. So if you bought it at the same level, $13 to $14, and then to sell it at $17.20. Why $17.20? Because the previous high was $20. So quite often, if the share price moves to the previous highest point, it's kind of stuck there. It's a strong resistance level. So it might pull back. So you can sell it there. Okay, and then you buy it at a low point, this share or any other share. Okay, and if you use this, it might take up to 2 years. It might be only 1 year. Okay, but it gives you about 40% of growth in this particular case. Okay, plus dividends. Now, if you're a trader, value trader, and you're using roll strategy, so rollover strategy, so you buy and sell, buy low, sell high, yeah, using technical analysis. So in our case, we have to first of all distinguish what's the size of the rolls, and with our emphasis, it's about $1. Okay, in these levels, it's a bit lower, but in general, it's $1 maybe sometimes $2. And that's why if you buy it at 13th, you sell it at 14. If you buy it at 14, you sell it at 15th. Okay, and you collect this premium. If you bought it at 1550, 1350, and then sold it at 15, so you can create up to 10% profit. How long do you have to wait here? It could be 1 month, it could be 1.5 months, this type of period, because that's the size of their rolls. Sometimes it's faster. So if you look at these rolls, it's kind of 2 weeks roll. Okay, but if you look at this roll, it's actually 1, 2, 3, 4 months roll. Okay, so sometimes it changes. So you have to be patient. Okay, now if you're using BR strategy or put options strategy, now it's pretty tough for Infosys to use it because their options not really good. And kind of if you don't like what profit they create on options, you may choose other companies for that. But again, if we buy Infosys, remember that we buy shares at the low at support and then sell call when it grows up at resistance. So what I expect here, if I buy shares of Infosys at $13.50 and then wait until it goes to back to the same level as now, $15, I can collect about 40 to 50 cents of rent. Okay, and it will give us, if the shares are not taken from us, we're going to get 2.8% profit, which is kind of good based on what we can get in the bank if our money lay in there, or we can get 10% if the shares are taken from us. So if the share price moved above $15 and we bought it at 14, sold it at 15, made $1 and plus 50 cents here, so we can get 10% profit. So it's pretty amazing. Okay, now if we sell puts, I'll show you now. If you're trying to sell it, the strike is very weird, $13.75 and the strike price. If you try to get it now, you get maybe only 15 cents, not more. But if you wait until the share price goes down, right, so you might get more. So that's why I put 40 to 50 cents. That's what you can collect. And again, it will give you 28 or 2.8 to 3.5%, depends what you are getting here. Okay, but it's really difficult to distinguish your percentage because you're not buying anything. You actually just have to have assets on your account. Okay, you can buy shares and shares will be growing, but you kind of using a margin in this particular case. So you have to have a capability to buy shares, but you don't have to have money to buy the shares. Okay, that's the important thing about it. So sometimes this percentage can be quite higher than real calculation. Now, and if the share price slides down below this level, your break-even price, like you buy, like break-even price for this particular shares would be if you use $13.75 strike price minus whatever premium you collected, 40 or 50 cents. So it means it's going to be 13.35 or 13.25. So it's quite good price of buying Infosys. And we know, we look at our evaluation that it can go to $20, $12.97. So it's quite close to that lowest point for us, right? So it's pretty safe play. But again, remember, when you sell naked puts, you have to do it only when you are happy to hold this company. Don't sell puts if you're not happy to buy the company. So don't sell puts if you don't have money to buy a company. Only sell puts when you're happy to buy a company and you have a capability to buy the company. Okay, so only in this case. So this type of strategy. Just curious, guys, what strategy is more appealing to you? What do you usually use, and what would you use out of these companies, out of these strategies? Okay, you see, it's for everyone, and it's all right. I mean, all correct. All of your strategies, all your approach is correct, because you have to choose the strategy which is appealing to you, which you like the most. Okay, because if you buy and hold, and instead of that shares went down, it's pretty upsetting because you have to wait maybe sometimes 3 months, 6 months, sometimes a year, and only then company moves up. It's like, I believe, Michael, you understand me, because you had Chica, and Chica like was down and down on $12. Look at this now. It's like moved 50% within 1 month, right? Or maybe 1.5 months. It's just quite astonishing move. And sometimes if you choose this strategy of buy and hold, you have to stick to that. You have to hold it. If you choose BR strategy, you have to use this strategy, okay? Because some people, when they buy for long term, after that it's fall, they start renting and then start moving up and they're upset about it. So you have to use the strategy which is kind of more applicable to your situation, okay? So that's very, very important. Okay, do you have any questions about strategies? Again, about puts, you sell puts at support level, okay? You sell calls at resistance level, you sell puts at support level. 20, that's the date, yes. So I always write it down like that because some shares, they have weekly options and I put January 17th, it's a year. 20 in brackets, that would be the date. 15 strike price, then it's call or put, right? And then limit at whatever sell you do. All clear. Now that's how it looks like. It's really weird. It's to be honest, I don't see it quite often when you see strike price $13.38. I believe it's based on dividends because they are paying dividends, and that's how they deduct. It was 14.50 probably, and now it becomes like that. So you can see at the moment price is about $15, and if we sell call, we can get 50 cents. Right now. So that's how I distinguish, because I put 40 to 50 cents. Why did I do it? Because if the share price swings down to $14 and I buy shares and then it swings back up to $15, it will take maybe a week, maybe a few days, maybe 2 weeks. So the premium will go down. It will be low. Time value will go down. So that's why I put a lower premium here. Maybe it would be only 30 cents. It depends how fast it will happen. Okay. Now, similar story with puts. So I put $13.75 strike for put, and you can see that it's only 15 cents right now. But I am paying attention. Okay, so if I believe that the share price can go to about $14 or $13.50, how much will I get there? So probably roughly about the same as I can get at $15 right now, because it's at the money. So I can get it now 55 cents. So if it goes to about $13.75, I can expect the same amount, maybe a bit less. But because there is a time difference, so it might take a week or a few days or 2 weeks, this premium would be smaller. That's why I put 40 to 50 cents. It could be less, it could be even more. If it drops to $13, I might get nearly $1 for that, for this strike price. So you choose it yourself, how you operate it with that. Okay, quite often limits are helpful. So if you put the limit, because I presume you don't stay on the market, right? You don't wait until half one in order to get to this level. So you just probably check it once a day or maybe even less.